Well, dear listeners, hello and welcome to the Money Mentor podcast again. I'm Lachlan Hammett, but you're not here to listen to me. You listen to here to Dr. Andrew Wilson. How are you today, Doc?
Yeah, I'm good, Lachlan. How are you? Have you got the spring fever yet?
Yes, I do. And it was a wonderful 30 degrees here all last week. It's cooled down a little bit on the coast, but I had a spring in my step last week. It was fantastic, lovely and warm.
Yeah, Melbourne and Sydney had some warmer weather as well, but back to normal a bit in Melbourne anyway. But it's been unseasonably warm for most of the year in Melbourne. Maybe some climate change happening there. And it's probably been unseasonably cold in Sydney. So, but it's always warm up in your neck of the woods, in the glorious southeast Queensland, or the whole of Queensland. So it's good. But it is spring now. It is the spring selling season. It is the time for buying and selling. We've seen some clear indications of that really emerging over the last few weekends in the auction market. We'll talk about those results, last weekend's results, at the end of the show. All positive in the markets, and it has been a real positive year so far for housing markets. We had we're talking about seasonality. We had an unseasonable winter selling market, really, or housing market, where, it was quieter, which it always is, of course, but it wasn't as quiet as usual, and that energy is still sort of percolating, particularly in the big three. And the big three now are Perth, Brisbane, and Adelaide. And we're going to look at the latest house price results for August. It hot off the press. It's the 4th of September today, 5th of September coming up with the show, and we've got the latest house price reports, and no surprises really there, but just a reinforcement of the sort of multi-speed housing market that we've had really for the best part of the past year or more. So, Lachlan, we can get going if you like. Enough of the.
Let's get into it, Doc. Land of opportunity. I'm keen to hear your thoughts on it.
Yeah. Okay. Well, enough of the blather. Let's get stuck into it. We are approaching our 100th episode of the podcast, coming up soon. So we'll have to get the streamers. We have to get out the streamers, the confetti, the balloons, all the noisemakers for that one. We'll have to come up with a special show. Maybe we'll look at the top 10 suburbs for next year. That would be a wild one, but maybe we won't. But we'll see. So there's a bit of a tease for those that are listening out there, and we've been pretty good with our forecasts. So maybe that would be an exciting celebration of our 100th show. So it is all about my housing market, and that's my brand. I operate as an independent commentator on the housing market. We're all about the current state and future prospects of the housing market, of your housing market out there. We work in conjunction very closely with the Infinity Group. We've been a long-term associate of Affinity, and we certainly have a very clear objective to provide the real insights into the housing market. We get enough sort of BS, if you know what I mean, enough sort of clickbait stuff happening when we talk about or when we look at housing market commentary. But we use a lot of real-time data, also a variety of data to come up with it's like a jigsaw puzzle. We put all those jigsaw puzzles together to come up, all the pieces together to come up with the puzzle. But it's also like another analogy we've been using, putting the bricks together in the wisdom wall. So the wisdom wall for the housing market, and we put all those bricks together, and that's why we have a pretty good record in terms of our outcomes. And as I said, we've got a pretty exciting show today with the latest house price data and unit price data. So shall we get started, Lachlan?
Yeah, absolutely, Doc. Very, very excited to hear what you have for us.
So it is the week to Wednesday, September the 4th. Spring. It'll be Christmas soon. Can you believe it? My God.
Christmas decorations are already on sale.
Oh, no. They've probably still got the Easter eggs on sale too.
And then they'll be next. The hot cross buns will be next. Oh, no.
Well, people buy those hot cross buns all the time. They don't even wait for Easter. So I don't think they wait for the Easter eggs either. But anyway, that's another story.
Oh, no.
Yeah, Christmas is coming, but we've got to get the spring selling season over and done with. We've got a good intro into it with the winter season being quite benign. in terms of we had higher sales and higher volumes of listings over winter. But this is the week to Wednesday, September the 4th. This week we're going to discuss the August house and unit prices, hot off the press, and also look at those July retail sales. And retail sales continue to surprise on the upside. So consumers are still spending out there, which is a good sign. It means there's still plenty of confidence around. We see a lot of these surveys, consumer sentiment surveys, that all tend to be very negative. And yet the real data, and I'm not a big fan of surveys, the real data keeps showing strong results. You tend to find in a lot of surveys that people sort of say what they think the interviewer wants you to say. So they tend not to reflect the real world. But look, I know things are tough out there for many people, but certainly there's a lot of spending going on. It really hasn't eased off that much since the boom through COVID, with all that stimulus package stuff, promoting consumerism and retail sales. So we'll have a look at those as well as the latest weekend auction results for the last weekend in winter, which was last weekend, just to see if those signs are continuing to point to a rising market as we enter spring, which it usually does. So let's have a look at the latest home prices. Mostly higher again over August, so prices continue to rise generally for both houses and units. We had a dip in the previous month for units, but they bounced back over August. So this is what we measure here is the 3 months, so that's the quarter to August, so that's 3 months worth of sales. But we compare it to the 3 months worth of sales over the previous month, which of course was July. So it's a monthly rolling quarterly house price model, which tends to give us not just a nice big snapshot of data, but it shows us from month to month rather than from quarter to quarter. So it is all about looking the market, how it's evolving on a month by month basis. And as I mentioned, we've still got this big fragmentation in our capital city results. Clear leaders, Perth, Brisbane and Adelaide, they are booming markets at the moment for both houses and units. Very strong, not just the monthly growth, but the annual growth. Melbourne and Sydney are certainly underperformers compared to those big three, if I might call them there. And it is part of that, waning house price growth that we do get through winter. And it's interesting because Melbourne and Sydney are the markets where we do get the real spring bounce, because Melbourne and Sydney are springtime markets. And that really reflects the fact that they have substantial prestige markets. That's higher priced property stratums, if I could use it that way. And of course, they tend to be most robust during spring. That's when the higher priced markets activate during the spring period. And of course, that gives us a bump up because we're getting a higher proportion of higher priced properties transacting in the marketplace. That's why we typically see higher prices in Melbourne and Sydney during spring, because they have a much higher proportion of prestige markets and prestige property compared to the other markets, Brisbane, Perth and Adelaide. So let's look forward to that. Let's see if it holds. It's interesting because those prestige markets in Melbourne and Sydney have been underperformers. And particularly in Melbourne, that's been holding the market back for the last few years. So the overall price results will be relying, if they're looking for a bounce out of Melbourne, on an uptick in the prestige market there. And we've had some sort of up and down early signs that that's happening, but we've had some clear signs out of Sydney that prestige property buyers and sellers are up and running already. But we do expect to see those early signs through the latter part of August. So let's await that likely revival in prices in Melbourne and Sydney. But there's no doubt that the big three, Perth, Brisbane and Adelaide, just continue to roar along, Lachlan, if I could say that.
Yeah, 100%. They sure do.
So let's have a look at the chart for the national house prices. This is the national weighted average house price. So the weighted average means that we take all the capital city results and then we create a weighted average based on the number of listings and sales in each one. So obviously the weighted average favours the big markets in terms of listings and sales, and that's Melbourne, Sydney, Brisbane. So it's really sort of a Melbourne, Brisbane, Sydney combo. But nonetheless, and there is really no such thing as a national house, of course. Where is it? I don't know. But this gives us a measure overall to see how the overall capital city markets are travelling. Capital city markets are travelling as one measure. So up again, we've had 18 rises over the last 19 months in house prices. The national house price now tracking at $1,147,000 and $15. So quite a good result there over the past year. As you can see, some strong growth going forward. So let's have a look at the breakdowns. Over the month, we can see there, we look at the monthly growth rates. Look how strong Brisbane, Adelaide and Perth are. Brisbane up 1.1 over the month. Adelaide up 1.5%. Perth up 1.7% over the month. The smaller markets continue to be easier. Hobart down 1%. Darwin, which is a volatile market, smaller market, and it does have a lot of seasonality in terms of its outcomes, down by 2.7%. And Canberra's really been heading sideways at best, really, over the last year, down by 1.8%. Sydney up marginally, 0.2%, and Melbourne again just down marginally by 0.3% over the month. But when we look at the annual results, Lachlan, we can really see how strong those Brisbane, Adelaide and Perth markets have been. Brisbane's median house price, up by 27.4, Perth, up by 27.4% over the year. That is a very, very strong result. Yes, its median is, well, it is a bit insane, but its median is still below the other major capitals, but gee whiz, it's closing in very fast. Adelaide up 17.9%, another big result over the year. And Brisbane, up 16.3%. You know, that Brisbane market's really been on fire for the last couple of years, given it was generated by all that migration out of the southern states through the COVID lockdown period, but it's continued on, a lot of momentum in that Brisbane market. Over the past year, Melbourne's still dragging the chain. As I said, a lot of that's been the prestige market underperformance, down by 1.4%. But Sydney, reasonable result over the past year with house prices up by 6.2%. Look at the last 2 years. Perth up 37.3% over the past 2 years. Of course, Perth had a lengthy period of underperformance. I'm not sure it'll ever get back to where it was, where at one stage, about 20 years ago, its median price was around about the same as Sydney's. But certainly in catch-up mode, it has a strong economy. Its medians are still highly affordable compared to the other capitals, or certainly affordable compared to the other capitals. And Perth, Western Australia, has the highest incomes of any of the major capitals. So it's got a lot of affordability positives going for it, and that's one of the reasons why prices continue to rise. So, big mover there. Brisbane and Adelaide are really closing in on the Melbourne median now. These are adjusted medians, so we adjust this for price mix. So it's not a raw median. Because if it was a raw median, we'd have a lot of ups and downs because of seasonality. But this takes out the seasonality in the model. So, again, fragmented market, the big three roaring ahead. Melbourne and Sydney, sort of thereabouts, just above the line. But the smaller markets, Canberra, Hobart and Darwin, certainly clear underperformers. But, if you're a homeowner in Adelaide, Perth and Brisbane over the past year, you'd be pretty happy. You'd be pretty happy also in Sydney with 6.2% rise in Australia's most expensive housing market. So when we look at units, as I mentioned, Lachlan, units fell away a little bit over the July quarter compared to the June quarter, but bounced back up again over August compared to July. When we look at the breakdowns for units, a lot of the improvement in the national unit price came from Sydney, which was up 0.4%, because Sydney makes up nearly half of the weighted average for the national unit price, because most of the activity, nearly half the activity in units in the unit market comes out of Sydney. Melbourne just marginally by 0.1%. Brisbane up 0.4%. It continues to rise, that big Brisbane market. Adelaide and Perth are smaller unit markets. They tend to be volatile because they have a smaller unit, because they have a smaller volume of activity, and they don't have the sort of high and low variance in the actual price of units. But when we look over the past year, again, the big three, look at that 28.6% rise in Perth's median unit price over the past year, and Brisbane 24.7% increase in Brisbane unit prices. It wasn't so long ago that the media were telling us that there was, and commentators were telling us that there was chronic oversupply in the Brisbane unit market, that prices were going to plunge, etc. Well, by Jesus, they get that one wrong, because prices have
They
just
sure
gone
did.
prices have gone through the roof in Brisbane inner city apartments, 24.7%. You'd be pretty happy if you ignored that advice in terms of the Brisbane market's perceived so-called oversupply, because you would have made some big gains there. The unit market. Sydney unit prices 4.4%, just mentioning Adelaide up 19.3%, another strong rise. And just going back to Brisbane, just reiterating what we said about all that scuttlebutt about the negative prospects for the Brisbane unit market, look at the results over the past 2 years. Brisbane's units are up by 39.1% over the past 2 years. That is a great result for unit owners in that Brisbane market, particularly that inner city market in Brisbane. 39.1%, Adelaide up 38% over the past 2 years. So some big results in the unit markets. Not as strong in Sydney, but still up 6.7% over 2 years, up 4.4% over the past year. And Melbourne up marginally by 0.9% over the past year. But we are looking for a revival in that Melbourne market. Good value opportunities there.
Land of opportunity, Doc.
Yeah, and yields are, because of lower prices and rents have skyrocketed in Melbourne over the past year. It's pushed up yields, and yields have been tracking in some suburbs as high as 8% in Melbourne, and that always attracts investors, which means that prices are rising. And a number of these suburbs, these unit suburbs in Melbourne, are now attracting higher prices and a lot more demand, and listings are falling. So early signs with those high yields of a turnaround in that Melbourne unit market. And this is what typically happens with the lower prices and in a market where there's a shortage of rental properties and rents are rising. It pushes up yields, that attracts investors, and that of course means more demand. Listings are reduced and prices go up and yields fall. But everybody's happy because there's still high yields, but capital growth is starting to come in. So a good recovery market in prospect for Melbourne, particularly over the spring season, but we will wait to see those results. But another up and down market in terms of national prices for both, in terms of capital city prices for both units and houses. But no doubt, there's a head of steam still in those Adelaide, Perth and Brisbane markets for both houses and units. Sydney motoring along reasonably after a quieter winter period, which we expect, but prospects for Sydney and Melbourne, as I said, are certainly better during the spring selling season, which is now upon us. And when we look at the auction results, I'll show you just what I mean about those prospects improving. If you want to get a copy of the latest My Housing Market August house and unit price report, there is a QR code. Just get your cameras out, get your phones out, bang, bang, take a picture. It will give you a link to the latest, the PDF file for our latest report. So we already discussed July retail sales. They were steady over the month, so no change over seasonally adjusted retail sales over the month, but they're still up 2.3% over the past year. The ABS has been sort of a little bit negative in terms of their view of retail sales for about the past year. I don't know why they've bought into this sense that consumers are abandoning the market, because the data from retail sales just hasn't supported it. We had a 0.5% rise over the previous month, June, and the ABS told us, well, that was because of mid-year sales. All right. Well, it looks like those mid-year sales kept going through into July, So that excuse for a higher result over the previous month sort of doesn't hold. Being mid-year sales really doesn't hold true. But anyway, maybe it was. But we're still elevated the level of retail sales, highly ahead, or they're ahead, significantly ahead of where they were in the post-COVID period, and they're still tracking through that at levels similar and higher actually than the boom period during followed the stimulus packages that were presented to the economy during COVID. And we can just see that then that still higher than a year ago, well ahead of where we were before COVID in terms of retail sales, massively ahead. Yes, there's inflation. This is the value of retail sales. So as inflation rises, that tends to push up the value of retail sales, regardless of how many people are buying. And also, we've got more people buying because of migration. But even considering that, we're still tracking 40% higher than where we were in the pre-COVID period. So that doesn't cover inflation and migration. So it's still a good, strong result there in terms of consumers. And it reflects how strong our economy remains. And that's a good sign, for confidence going forward. And we shouldn't be surprised because our unemployment rate still is just over 4%, and that's a very strong result. And we have a very big participation rate, which means that we've got a record number of people engaged in the workforce as a proportion of the potential workforce. That shows you that there's plenty of opportunities out there. And of course, wages are growing at near record levels. And put that all together, it means people are out there continuing to be confident about spending. So we've already discussed the weekend auction results. We have an overview, so let's have a look at them. It was the last weekend, Lachlan, in winter. We've had, as I said, quite an interesting winter weekend auction market. It certainly continued to produce higher listings. In fact, higher listings than we've ever seen during the winter period. But we had higher listings than we've ever seen during autumn. So it's been a real seller's market in terms of the volume of activity. So even though we've had lots more choices for this time of the year, for winter, for buyers, it really hasn't pushed the the clearance rate down significantly. In fact, we've had record sales during winter. So even though we've had this lift in listings, we've still had quite reasonable clearance rates, but that's given us high numbers of sales for this time of the year. So it's been a very positive winter, and it's a very good intro into the spring selling season. So enough of the blather. Let's look at the results. Still rising auction numbers in Sydney and Melbourne and in the other capitals. And in fact, auction sales, of course, were rising because we did see higher clearance rates as well. So again, with spring now upon us, we should expect to see more positive results, more higher listings, and really it's a good springboard into the market, what's happened over the past 3 weekends. But we do see that typically in August, the sort of the genesis of the spring selling season coming through. Let's have a look at the results. Big number of auctions in Sydney, 912 auctions in Sydney, well ahead of the weekend before. Good clearance rate for a big number of auctions, 71% in Sydney. You can see compared to the same weekend last year, Lachlan, that auctions are well ahead of where they were a year ago. Like I said, we've just never seen listings, these numbers of listings at this time of the year. Clearance rate's still down a little bit compared to the same time last year, but that was a very strong period in the marketplace. And of course, buyers had fewer properties to choose from, so that acted to push up the clearance rate. Melbourne, nearly 1,000 auctions, just under 1,000 auctions in Melbourne, again higher than the weekend before. And Melbourne's clearance rate was actually higher. So the Melbourne clearance rate's just been thereabouts for the last, we'll look at the trends shortly, for the last month or so. So still, a little bit of a buyer's market. Again, a seller's market. Again, it's the lower mid-priced regions in Melbourne that are performing well, and it's the inner suburban markets that are dragging the chain in Melbourne and keeping those clearance rates lower. But a good result there. Listing numbers higher, clearance rate higher compared to the weekend before. Listings, again, well ahead of the same time last year. It's a trend everywhere. And the clearance rate not too far away from where it was a year ago in Melbourne. And as I said, that was a strong period for all our markets a year ago. Brisbane, big lift in auction numbers, big lift in the clearance rate. Good result there for Brisbane, which we know is still a boom market. And again, the clearance rate down a little bit on a year ago, which was an extraordinary period of growth in Brisbane. And listing numbers basically half where they were a year ago. So that, again, was another reason why we saw those, what were for Brisbane, very high clearance rates. Adelaide listings up, back to 80% plus clearance rates in Adelaide. Where have you been? 80% for Adelaide. For a while, it's been a little bit of a stranger. But look at a year ago in Adelaide, 93% clearance rate, which I think was a record for a weekend for Adelaide. That's just crazy stuff. Basically meant every property offered was sold. on that weekend. And you can see, again, listing numbers around about half of where they were last weekend in Adelaide, and good signs for that Adelaide market. And Canberra, again, gave us a tease. Good result there for Canberra. Similar listing numbers, but a big result. We've had up and down results in Canberra for the last couple of months. We've had a few weekends where we've got those 60% plus results, and then it sort of tracks backwards a little bit, but certainly well ahead of where it was a year ago. So look, some good signs there. Again, it really is, probably the first real weekend of spring. Well, it's not really, but it's giving us some clear signs. These are big auction numbers across the board in all the capitals and very steady clearance rates. And when we look at the elements in terms of the local factors, these clearance rates certainly clearly reflect what is still a seller's market entering into the spring selling season. So let's see if that momentum continues. Here's Sydney, still above 70% in Sydney, where it's been all year, tracking above 70%. So we'll see what happens with Sydney when those when the higher priced properties come into the market. Just a bit of a thing on Sydney. We do the regional breakdowns with our Sunday full capital city report for Melbourne and Sydney. And Sydney's inner suburban or prestige regions have really been performing well. The lower north and the northern beaches have led the charge over the last few weekends with the highest clearance rates. Again, Lachlan, that's a good sign that the spring is here and you've got those higher priced markets starting to activate. So Sydney's still above 70%. Melbourne, actually, its highest clearance rate for nearly 6 months over August. So it's sort of been there, Melbourne, and as I said, it is a fragmented market. It is about mid and lower priced properties clearing quite reasonably in Melbourne. It's just the higher priced inner suburban areas such as the inner east and the inner south and the inner city that aren't performing up to scratch in terms of giving sellers what they want in terms of those higher clearance rates. But Melbourne, I think, in a good position there if we do get the prestige markets engaged over the next month or so to get its clearance rate, maybe pushing up closer to 80%. Brisbane, good results there for Brisbane. As we know, anything over 50% is a positive for Brisbane. So we know that with the price data as well, the prices are still booming along in Brisbane. Adelaide pushing back up towards those 80% results. So a good result there for Adelaide over August. Clearly a seller's market continuing in Adelaide. And, Canberra, come on, Canberra. Now above 60% over August. So, some signs there that it's just starting to re-engage that Canberra market, but the next few weekends will be instructive if it can hold on to that 60% plus results. If you want those auction clearance rate results of the Capital City Snapshot on Saturdays on my LinkedIn account, Doc Andrew Wilson at LinkedIn. That comes out around about 6:30 every Saturday night, and Sundays around about 9 o'clock you'll get the full national report, which includes the regional breakdowns for Melbourne and Sydney, as well as the top 10 sales under the hammer for that Saturday. Again, Doc Andrew Wilson at LinkedIn. You can get that full report and commentary. If you missed out on that one, here's the QR code that will link you to the latest national weekend auction report. Now we're going to finish off, Lachlan. This is the really exciting part. When we offer our giveaway, My Housing Market Suburb Data app in conjunction with Infinity. So if you want to get a hold of that, there's another QR code plus the link there to the PDF file. But there's a password. Hello. It's password protected, and you've got to go through Infinity to get it. But gee whiz, it's worth getting. Here's a screenshot. We cover all the data on a daily basis for asking prices and asking rent. So it's all the listings data for every suburb in the country on a cute little app. There's a screenshot there. You can put it on your phone, put it on your computer. You can filter it for price or rent. You can filter it for the capital city region or the outside capital city region. There's a suburb we've used on the on our screenshot, Blacktown. We can filter it for house, unit, or townhouse, and you can also filter it for the number of beds. So that's a great, can really drill down to see what's happening in the local market. And the results there we give not just the median price, asking price, also the low and the high asking price, and the number of properties that are for sale. So it's every suburb in Australia that has data is there. If it doesn't have any data, it won't be there. And we do exactly the same thing for units, and there's the results for units. So get hold of that one. If you're looking for that real-time insights into the housing market, it's a good one, whether you're a seller or a buyer, a landlord or a tenant. It gives you all the updated information, on a daily basis. So good one there. Next week, we're going to look at the rent report, August house and unit rents, July building approvals, and as usual, the latest weekend auction results. If you want to have a copy of today's presentation, there is the download for this week's report. Again, just take the QR code of that, and it will give you a link to the PDF copy of today's results. So that's it, Lachlan, today.
Thanks, Doc.
I know you're looking forward next week to the first report for spring.
Okay? Absolutely.
Yes. So will the momentum continue in our auction markets? We'll find out next week, but some really good positive signs there going forward, and plenty of activity. The agents will be happy. Lots of sales happening. Clearance rates are holding up, but we've got a real surge in listing numbers. So lots of activity in the market. And as we looked at recently, that inflation data looks to be getting a bit more under control. So that means we don't have the worry about maybe having to have higher interest rates down the track, maybe. But so a bit more positivity. And as retail sales data shows, people are out there spending their money. So
absolutely,
a positive environment. So we'll see you next week, Lachlan.
Absolutely, Doc. Look forward to it.
Good on you, mate. See you later.
Yeah. Thanks, mate.